I wouldn't say we're excluding areas, but other areas where we're struggling to find opportunities, there will be losers from AI. AI is obviously hugely disruptive. We do think it's a massive transformation that's really here to stay, but there's a big question mark about which businesses will benefit and come out at the forefront and which businesses will get left behind.
Die Geldmeisterin. Der Finanzpodcast mit Julia Kistner.
It's really great that you're on the show Geldmeisterin. You're the first time on my show, so please, could you introduce yourself briefly?
Thank you. Well, look, thank you for having me. So I'm Frances Gerhold. I lead our investment specialist team in our international equity group. I joined the firm at J.P.Morgan 17 years ago now, at a very interesting time in 2007. For those on the podcast, I was just told I look young, so that's very flattering. And I've been navigating global equity markets with our team ever since then.
Is there anything special at the moment for you?
I mean, I think there's always something there to surprise us and something unique at any point in time. That's certainly the case today. One of the things I think we have to acknowledge is that equity markets have had a pretty good run. And we've been spending quite a lot of time looking at the sustainability of earnings profiles for businesses around the world and really balancing that against some of the valuations we're seeing. The S&P is at 22 times today. So we're seeing, actually we're still pretty confident about the earnings outlook in the US though. So yes, valuations are looking a little bit rich in some areas, but we're forecasting about 14% earnings growth this year for the US. Now, there's a big spread still between whether that's the Magnificent Seven or we call it the leaders of today and the rest of the market, the other 493, which we think that sort of spread will narrow a little bit, but there is still for sure a gap. So there's parts of the market that we think are much more challenged in terms of earnings growth and others that are much stronger. But that's something we're really balancing is how do we think about investing against a backdrop of heightened valuations and mixed earnings outlook across businesses. That dispersion across businesses feels very high today.
But this is really interesting. You say one thing is the valuation, but you say there are good reasons why they are valued so high. And do you think this will go? You look more on the earnings season which comes now, and what is your prospect there?
Yeah, I mean, look, it started pretty well in a number of areas. You're looking at whether that's US banks or, even today, some of the types of companies we've been looking at in terms of the luxury space in Europe. We've just seen some very sharp share price movements there today on the back of results. So I think, it's starting quite well in some areas. But as I say, it's a little bit of a cliche, but we want to be really selective at the moment. So as global equity investors, we have the luxury of investing anywhere in the world. And, that's both a gift and a challenge because we have a big universe to choose from, but also we have a big universe to get wrong. So I think it's really important at this moment, as much as ever, really to be really selective in what we're investing in and also what we don't own. So where there are parts of the market where we're nervous or where we have caution, we're happy to not own them.
And which markets are really more interesting than the ones you're investing in?
Maybe. I mean, look, there's some areas where we are really cautious around, say, autos is an area where for a little while now we've been a little bit cautious on the outlook there. The extrapolation of earnings growth post-pandemic is still, too high in our opinion. So we think there's earnings compression there. If you look across a lot of the Eurozone automakers, there's huge competition from the likes of China, from other markets. And so, as we started talking about, when you compare that to the valuations, it's just not a good risk reward pay at the moment in terms of the valuations for a lot of those businesses. Now, but I would just say it could change. We are not wedded to, holding any business we like at any cost. And also if there's a business and the valuation changes a lot, we're very happy to lean in. Like we're pretty responsive to that, so to speak. So if I get the opportunity to speak to you again, I might be saying, hey, look, the valuations came off so much in these names that they then started to look interesting. But at the moment, there's a lot of caution there.
And you exclude the whole sector then? Or do you say, okay, Toyota with its hybrids, so this is quite still interesting, or maybe Chinese electronic cars? Or
yeah, we take it case by case. So we don't say, okay, we're not going to buy the whole sector. We look at each company on a case by case basis. But a lot of the names today, we just don't get there in terms of having that conviction in the business based on the current price. So it is an individual stock by stock decision. But in aggregate, we're not really getting there for the vast majority of those businesses.
And are there any other businesses you exclude at the moment?
Yeah, I mean, I wouldn't say we're excluding areas, but other areas where we're struggling to find opportunities. Look, AI, it would be probably, I'm sure every person you talk to is talking to you about AI in one way or another. And I think we as investors spend a lot of time talking, and we read the papers and about the opportunities in AI, right? But there will be losers from AI. So I think that's one of the things we're spending quite a lot of time talking about. Is like AI is obviously hugely disruptive. We do think it's a massive transformation that's really here to stay. But there's a big question mark about which businesses will benefit and come out at the forefront and which businesses will get left behind. So in answer to your question, where else are we not investing at the moment? There are some areas across any industry, every management team is telling us about AI. Every meeting we have, right? It's the buzzword bingo. They're all saying, hey, we're doing AI. And they all say they're going to be a winner from it. And we're just not convinced. So we're challenging them all on that. And whilst we do think there'll be some that win, there's some other areas, for example, maybe in the travel industry where we think, there's much more of a threat from AI, and, how are we going to be booking travel in the future? Virtual AI concierge services. Are we all going to be using traditional search? If you think, I'm from the Google it era. So when I grew up, if you didn't know something, you Google it. The era now of teenagers coming up or in whether that's ChatGPT or another forum, the way we search for information is changing, and that's growth in one area and a challenge in others. So we're just being very, very selective about the companies that we own and scrutinizing what we see as earnings growth.
And the same with quantum computers. We just heard that it takes 20 years since it will be profitable. So if I get you right, areas which are really very much involved in the change with AI, you are a little bit skeptical at the moment?
Yeah, we meet with management teams, we meet competitors, and our focus is on the long term. So we have a team of 80 research analysts doing this on the ground research. I think that's a hugely important part of what we do, because I mentioned being global gives you a lot of opportunity, but a lot of risk. You need experts on the ground. So on average, they have 18, 19 years industry experience. And what are they doing, to your question around AI? They are challenging businesses. They are meeting competitors. They're meeting people across the supply chain. And really, we're trying to form our own view of whether that company long-term is going to be a winner relative to the share price as well, and look at that valuation. Now, what we're not doing is taking current consensus price earnings forecasts and the promise from a management team that they're going to do well as enough. And we're really trying to cut through that hype. And I say hype because everyone talks about it, and we've got to find out the reality. There is a little bit of a lag, to your point, around, I don't know that it's 20 years, but around when we see it coming through in the earnings of companies. And I think, how patient markets will be around that is a big question mark as well.
Since you have global opportunities, give you more weight to Europe or the US right now?
Ooh, great question. You may not like my answer in that. What I would say is we're pretty neutral. We're not trying in our global portfolios, most of those are quite neutral today, as in broadly in line with benchmark weights in the US, in Europe. Some of them are a little bit on the margin, a bit overweight Europe, but we're certainly not actively sort of taking underweight positions in the US overall. So, we started talking about valuations. Like, it's not that anyone is banging their hand on the table going, the US market is cheap, right? I think that's hard to justify. But can we find exciting stocks that are listed in the US market today? For sure. So we're broadly in line, but what we are doing is, as I say, taking very differentiated views on the stocks. So there'll be areas that we really find really interesting in the US, like I spoke about some of the AI beneficiaries for sure, some US banks looking really interesting. There's, real scope for financial deregulation and opportunities in some of those banks.
And
M&A, exactly. We've already, seen market responses to that a little bit over, recent months. So there's definitely opportunity, but we're just being really selective on a stock by stock basis. The premise of our process is to take each global sector and really find the best companies, the best investments within each of those. And so we're finding opportunities there. Like, let's not forget Europe, though. And I think, what I would say is expectations seem to be so low. And we're really looking at kind of two-speed Europe. There's very different things happening in different parts of Europe now. And whilst there are areas like autos is one example where some of those companies are quite challenged, there are other areas where there's a lot of opportunity. Like, we talked about AI, like utility companies. AI is energy hungry, right? And I think a lot of these utility companies can be big beneficiaries from that. And some of them are trading at really attractive valuations. So
and also in Europe, because the AI is happening more in the US, and I understand if you need utilities there, but there's enough happening also in Europe to get into this sector.
And like, it's a pretty global business. A lot of those European utility companies are supplying over into the US, right? So again, like thinking about it globally, that's an area that looks quite interesting. Like luxury names in Europe, I've had a really tough time. But look at the share price of, number of those stocks today. And obviously, like, don't want to be short term about this, but, we saw some great results. And we've seen quite a few of those luxury names rally on the back of that. I think we're trying to differentiate between some of those names that are very, very solid global businesses that happen to be listed in Europe, that are global businesses, and where their valuations are attractive. But long term, we think they're real survivors. We think they have strong brands, good management teams. There's some examples of that in the luxury space that look interesting. So I would say we're not forgetting Europe. We're finding opportunities, and the valuation dispersion is very sort of, as I say, we're like across different industries, like invested in Europe in some luxury names, some utility names, some of the more consumer space, some of the tech space, some of the tech is not only about US. I can think of like quite a few names in that space, whether that's, the equipment providers, some areas across there in Europe that look really interesting. So again, it's very stock specific. What we're not doing is saying we're going out and buying the whole of this market in Europe, whatever market, that might be. We're just finding really interesting companies that have that potential to grow their earnings and at a price that's quite attractive. And in aggregate, that price differential is very real. Europe's trading on 13 times, and I mentioned the S&P's on 22.
And what are you doing with the clean energy?
Yeah, I think important thing, is for us to try and separate some of the noise from politics and some of the rhetoric of what people are saying with the fundamentals for the businesses. And, we looking to the past, if we look back to, Trump's previous presidency, we saw him have a very, very strong campaign around traditional energy, right? We all remember the drill, baby, drill.
Yeah.
But if you look over that time, his presidency, those energy stocks really struggled.
Yeah.
And then the converse of when we think about Biden's rhetoric around clean energy, and actually like the traditional energy stocks perform much better.
Yeah.
So I would say I think taking a step back from that rhetoric and kind of focusing on the fundamentals, there are still opportunities in that space. So trying not to get too sideswept by noise. There's a lot of known unknowns. And by that, I mean, there's a lot of things that I think anyone can point out that they think there might be news flow on from US policymakers. but we don't know what the outcome will be. That creates volatility. There is noise. We know kind of what they are, whether that's tariffs, whether that's corporate tax rates, whether that's deregulation of certain industries, but we're yet to see what the real outcome is. So I think we really need to wait and see, but also just focus on the fundamentals. And volatility really for stock pickers creates an opportunity. Start to see volatility where those share prices dislocate from the fundamentals of the business. That's an opportunity for us. So a level of volatility, get comfortable with seeing that for a while, because a lot of bigger picture uncertainty we spoke about, I wouldn't be surprised if we saw that continue. I don't know.
And how would you describe your main strategy in stock picking? Do you have a role model like Warren Buffett?
That's a great question. A role model. Look, I think there's a lot of. One of the privileges I have of having been in this business 17 years, I get to work with alongside and see a lot of impressive investors. And that is a real privilege. I think it'd probably be remiss of me not to mention and say Mary Erdos. We have an organization led by, one of the most powerful women in finance, a really impressive investor. One of the things I think that really is valuable is people's willingness to share a different view. The last thing we want is to all get in a room and all have the same view, because you end up with an echo chamber of just, patting yourself on the back and saying, hey, we're right, we'll be right, and it's very close and dangerously close to we're right and the market's wrong. And I think that's a very dangerous place to be. So I think, the culture that Mary has created and the whole organization has created is one of really challenge yourselves. And actually, we touched on AI earlier from an investment perspective. We're using AI internally quite a bit these days to really just help us challenge ourselves. Using AI as a data technique to put data in front of ourselves for analyzing. So an example of a tool we've developed, we called it Analyst Moneyball. So anyone familiar with the book or the film and Brad Pitt, it's the same premise of picking baseball players using different stats to the stats everyone else on the market was using. We take the same premise with our research analysts, and because our process has been in place for 30 plus years, and we've got long tenure with analysts, we can take those analysts and use AI to look at, how accurate are our analysts' forecasts. But to your point, we're not using that as suddenly becomes a separate quantitative process. What we do is use it to scrutinize and challenge. So our analysts have that and data, we have the data, portfolio managers have the data, and then we sit down and debate it. What could we be missing on this stock? Why would this analysis, the Moneyball, show us that we might be overestimating earnings in today's market? What could we be missing? And the answer may be things are different, nothing, but it gives you that other lens to challenge your own bias, to have that debate. So I would say one of the things, from an investment perspective that I think, we really respect is just having a different view, being the different voice in the room.
What are you focusing in the next 12 months?
You may find my answer boring, but it's stock picking. It's individual companies and really scrutinizing those companies with our investment, hat on, and really thinking what is the sustainability of those earnings? Where do we think there's margin pressure? And where do we think the company can sustain their margins? We think there's quite a big difference in the market today between some companies where we think that earnings growth is really sustainable and others where we think it's going to be under pressure. And similarly for margins, where we think there's margin pressure in some areas. So it's individual stock scrutiny, forecasting, doing our own proprietary work to forecast what a company can earn, what its margins will look like, not basing that on kind of sell side estimates, doing our own work to really scrutinize what makes a good business and what makes a good stock investment. And really, really doing our homework there.
So same procedure every year.
Yeah, but that's, and that's, yes. What we're not going to do is, reinvent or change our approach. For 30 plus years, we've had the same approach to long-term forecasts, long-term emphasis, looking through volatility and focusing on investing in those best companies. And that's what we've seen over the long term works. And that's what we believe, will deliver for clients over the long term in the future.
Thank you, Frances. This was really interesting, and I'm looking forward to have you back here on the show.
I would love to. Thank you very much for having me.
Alles Gesagte ist nur die persönliche Meinung von Julia Kistner und daher keine Anlageempfehlung und keine Rechts- und Steuerberatung. Für Verluste, die aufgrund von getroffenen Aussagen entstehen, übernimmt die Autorin Julia Kistner keine Haftung.